all about being strategic so we can learn. They can also be learning as well. We can get as many communities together. Right. Welcome, Mary St. Clair. Spawn, welcome. House of Tambi, Amham, welcome. And thank you all for sharing the live. Thank you for tapping it out today. Happy Sunday. Welcome, everyone. And what we are talking about, the exact order of building wealth, earning versus wealth building. Which one is most critical? Which one is more important? And we've just established it. Wealth building, because it has zero caps, okay, on what you can earn. It doesn't require it for your person to be there. So it just makes sense for you to move away from the category of, I mean, not exactly move away, focus on how you can build wealth, okay, while still earning income, whilst also being an earner. The two of them, there's no point, there's no, great, awesome, yeah. There's no point you saying that. I mean, if you're enjoying your job, there's no reason why you say, oh, you know what, I want to leave my job or whatever. To enjoy it, because it's more money as well. It's basically more money, if you can juggle the two together. And that's what I mean. Here is about wealth building. So the second thing, now let's now go, having established that. Now, how do you build wealth? Okay. How do you build wealth is the next question. Okay. And most people try to build wealth in it. I just, because today I want us to be as structured as possible. Most people try to build wealth, but they invest in the wrong order. Those are the things I've literally said. People want to build wealth. Everybody understands that, okay, you know what, earning is not it's a good way. Earning will make me comfortable. I'll pay my bills. I would be able to live a decent life. I will be able to get a house and all of that. But I know that I will stay stuck. I will work to 65, but I will not be able to go on all those, fulfill my dream of, somebody like me that wants to travel the world. I cannot fulfill it. Being an earner, being an employee, I cannot, right? Understanding that. But then how do you build wealth? And most of the time, the issue that most people have is they invest in the wrong order. Because how do you build wealth, right? It's for you to actually start investing. Put your money towards asset, okay? That is how you build wealth. Put your money towards asset. And what are asset? Asset are any form of either business or items or that will generate money for you. It's basically money printer. You becoming an employer of yourself. Something else that is generating money from you for you outside of your normal income. And for the YT community, welcome, welcome. Thank you all for subscribing. Thank you for the follow. Thank you for the share. Welcome. And so basically, that is that. And we're talking today about earning versus wealth building, earning versus wealth building, and the right order of building wealth. And thank you all for sharing the live in. Thank you for subscribing. Thank you for the follow. That is so amazing. Elijah, welcome. Elijah Aaron, welcome, welcome, welcome. Happy Sunday. So we have just established that you earning income, just getting a salary will not get you there. There's a cap to what you're getting in terms of income. There is a limit to what you can do with your life because your income is limited. You're also taking out some time off your earnings, right? Thank you all for subscribing and thank you all for the follow. If you haven't subscribed, if you haven't followed, consider doing that because you're going to learn about wealth building in this community. Welcome, welcome here and happy Sunday. So we've already established that for you to build wealth, it requires you to have assets. What are assets? Assets are anything that will generate income for you. Just the same way you are going to work tomorrow, 9 to 5. Some people already having panic attack because they don't know what's going to happen between them and their bosses tomorrow, right? But then they still have to show up because of the bills, right? Having understood that, right? But they still have to show up, right? But for you to be able to end that cycle or do it side by side, have financial peace, you need to be very, very strategic. You need to be strategic. And how do you do this? Have an asset that is generating something. What does this do? When you have something else that is generating income for you, it would give you, number one, it gives you financial peace. It gives you time wealth, so you have the ability to live life at your own terms, right? Live life at your own terms. Those are the things that it gets to help you to do, right? And then you do not have cap to the income. There is no limit to how much you can make as an asset owner or as a business owner, whichever thing, anything that generates income for you, right? there is no limit compared to being an earner, right? So having said that, so how do you build wealth is the next question. How do you build wealth? Because we have a packed class, we will go as quickly as possible today. How do you build wealth? Number one is you having an asset. Now, when you now have the assets, so I've had questions. So, Dr. Lina, yeah, I understand what an asset. Okay, assets will be, maybe a real estate. You buy a property, you put it on rental. Asset could be you buy a land, you can also put it on rental, or you are using it for a farm or whatever. Or asset could be simple ETFs, simple index funds, simple you getting stock. That is also an asset. You can also buy a business, you can buy a franchise. That is another way, okay? Any of this doesn't require your physical person to be there for. Give an instance, when you buy a stock or you buy an ETF, it doesn't require a physical presence. It only takes you 1 minute and you already place an order. 1 minute, you already placed another. And thank you all for sharing the live. Thank you all for the follow. Thank you for the subscribe, for those that are subscribing. Really appreciate that. And thank you all for all of the likes. So understanding that you already have this asset would help you build wealth, right? And there's the limit to what it will bring about. There is a limit in terms of income. So how do you now build this wealth in the right order, right? How do you build it in the right order? So the way I always talk about is I hear people say, okay, real estate is one. Then, I mean, let's talk about the popular one, real estate and ETFs, right? Real estate and ETFs. Dr. Lina, should I buy real estate or should I invest in ETFs? That's one of the questions I always hear every single time. It's all in the having it by order. It doesn't matter which one you invest in, right? It is just about the order. You do not, this is not about pick and choose. It is not about pick and choose. It's about the order. There's no reason why you cannot have this and also have that. There's no reason, right? But consider having this and having that because it just helps you to diversify your portfolio. That's what it simply helps you to do, either in terms of real estate or in terms of in terms of ETFs or in terms of a business. You want to buy laundromat, you want to buy a franchise. It's just a function of it's almost the same. But which one comes first? What is the right order? Should be the question. Because if you layer it properly, you realize that you're going to be building wealth successfully and sustainably. And thank you all for sharing the live. Let's tap it out. I know we are all locked in, right? Let's tap it out and welcome here. And the other thing, so first of all, except you have you have an inheritance, you came from wealth, you came from so much money, right? Most of the time, so 90% of the millionaires and the multi-millionaires and the billionaires, most of them, they are self-made. It's not like, okay, they are trust money. I mean, that was very, very shocking. Elijah, Aaron, welcome. Jason Gray, welcome. And every other person, Bamba, welcome. Bad boy, Phil, that's an interesting, and Keisha Manlove. Yeah, so I was so surprised when I saw that analysis. They said more than 90% of the multimillionaires and billionaires, they are actually self-made, right? Meaning that they are just like maybe the first generation of people that broke, become a multimillionaire in their family, right? In their family. So I'm like, that makes it very encouraging that it means that everybody has an equal chance, right? Of building wealth, right? Everyone has an equal chance. But one, it means that you did not get money from any other person, right? You did not get trust money. So how do you now build wealth? Understanding that it has to start from somewhere. Because for you to say you want to invest, you want to buy assets, it requires you to have an income. It requires you to have money, right? Awesome. Now, when number one thing is that you have to have a skill set. A skill set, something that will generate money from you. So a lot of times, all of us will start from being an earner. You will start from either you start from you got a skill from school. You got a skill. You became a doctor. You became a lawyer, or you became an IT specialist, or whatever. You became something, right? And in that process, somebody decides to start paying you for that skill set that you have, right? That's majority of the people. So you're earning 300,000 right now. You're earning 500,000. You're earning 50,000. Somebody is paying you for something that you have learned, like a skill set that you have, right? Now, having said that, the next thing is you want to, as much as possible, and for me, as much as possible, you want to save as much as possible. So when that income comes in, understanding that you don't want to remain a earner, you don't want to remain a poor dad for so long. You don't want to remain a poor dad for so long, because as much as you're earning, if you remain here, because a lot of people stay here for 40 years, they work from age 20 and they work to 65, then they remain a poor dad for the entire lifespan. Now, for you to be able to shift from the poor dad to a rich dad status, you definitely want to do one thing. When your income is coming, because everyone was going to start as being an earner, when your income is coming, what do you do? Okay, the first thing that you do is you make the income, and then you save some of those income, right? You use some of it to have your, and let's go to the board now. You use some of it you use some of it to fund your immediate lifestyle. Jap, welcome, and every other person. You use some of your income, like your earnings, you use it to fund your lifestyle, but you keep the majority of it, right? So that you can become a rich dad, so that you can start building wealth. How do you do this? You're going to ensure that, okay, for me, what I did was, when I have my income, I am not allowing lifestyle inflation to take over. I am making sure that I'm paying myself first, right? I am not I am basically buying my basic needs. Okay? Buying putting money towards my basic needs. What's my basic needs? My food, my shelter, so housing, mortgage or rent, groceries, my car, and of course, my utilities. Those are things that are my basic needs. That is where I am putting my money. In all of this, I have not said that I am buying one thing that is expensive, like a purse or whatever. I am not doing that. And if there's a reason, it is called delayed gratification. It's because my goal is not like every other person that wants to earn and do it and keep earning, remain in that journey for 20, 30, 40 years and retire at 65. That is not my goal, right? Even though I decide to retire at 65, I already have options. That is my goal. Now, having said that, I am going to be saving more, right? Saving more is my goal. Okay. Putting more towards my putting more towards my goal to wealth building. I'll put some towards my lifestyle, okay, which is my basic need, but I put more towards my wealth building, towards building assets. Okay, what does this mean? Okay, let's assume that I earn 100,000, right? Okay, I am putting 50% of it, 50,000, towards my income. I mean, towards my lifestyle. The remaining 50%, which is 50,000, I am putting it towards assets, towards wealth building. Now you might like, oh, that's, but there is a difference, because my goal is not to be on this journey for so long. My goal is I want to move from a poor dad to a rich dad. That's basically my goal. Okay. And because of that, I need to do things differently. Okay. I cannot be doing everything. You cannot be doing the same thing and expect a different result. Every other person is doing 9 to 5. I'm doing it from age 20 to 65. I am saying, no, I'm not doing a 20 to 65. I'm doing a 20 to 40. I'm doing a 20 to 50. So I need to definitely do something different. I want to move from earning to becoming wealth builder. I need to do something different. And how do I do this? I'm saving 50% of my income. I am putting it towards asset, towards wealth building. Okay. When my friends are doing certain things, I am not doing it. I am just basically putting it towards my wealth building. So where do I now put this wealth? Okay, what does it mean by wealth building? So the first thing is that, because understanding that savings alone, so saving that $50,000, it's not going to build wealth for me. I already established it. having $50,000 savings or 50% of my income saved would not build wealth. It would just make me comfortable and give me some sort of financial peace, but I will remain on the rat race. I'll remain on the, hamster wheel for that 65 years, because the fact that I just have money in one account giving me 0.01% and I do not invest it, it simply puts me where? It puts me in a journey of I'm just keep building small, small, small. That's what it just simply does, right? It means that I cannot build a lasting wealth, right? But the goal is that I want to build a wealth. So how do I do this, right? Number one, I am going to be putting some of it in an IS savings account, 3 to 5%, okay? Because I understand that inflation, it's about 3% right now. I believe so. It means that, and when I say inflation, inflation literally eats it means that when you have $1, 3% of that, and for every $1 that you have, you are losing 3 cents out of it. Or is it 3%? Yeah, 3 cents out of that money. So it's not what the same thing that you have in the bank. But guess what? The bank is giving you 0.01%. So understanding that, I understand that yes, the first step is for me to save. However, saving itself would not help me. Saving itself in a Bank of America, Chase, and not doing something else will not help me to build wealth. I'll be better than others, but it will not help me to build wealth. So that is number one. Savings is number one. Okay. Number two is ensuring that I manage my debt very well. So if I have debt, so for instance, I use credit card, or for some reason I am making sure that I am paying off my credit card within the billing cycle. Okay, I am paying my credit card within the billing cycle. So what this means is I am ensuring that I am not accumulating debt. I am not accumulating debt. That is just the goal. Not accumulating debt. And whenever I have debt that are above any debt that is above um 10%, okay, personal loan, credit cards, what's your any high interest consumer debt that I have, maybe I bought a couch, I bought it on credit because I just bought a new house and all of that. I am making sure that I am paying within the billing cycle. Okay. What does that help me to do? Okay. What that helps me to do is I am number one, it gives me financial peace. Number two is that I am not losing money, because if I'm paying a debt of 27% on a credit card, it simply means that I am not managing my money well. I am not putting my money in the right place. But guess what? The goal is wealth building. It simply means I am not building wealth. Summary, okay? I am not building wealth. So understanding that I will be paying off my credit card within the timelines, okay? If I'm not there, I would make sure that I am disciplined enough just so I can build wealth. I am disciplined enough. I am not buying things. I'm not allowing lifestyle inflation to creep in. Okay. All of my credit and all of my debts that are above 10%, I am paying off this. Now, why do I say that? Okay, I need to pay off my all those high debts, and I'm not talking about I'm not talking about what's it called, I'm not talking about low interest debt, like like a mortgage. Okay, it's because if I'm trying to build wealth, right, I want to invest. Let's assume that my investment is giving me 20%, but I have a debt of, let's say my investment is giving me 15%, my business is giving me 15% per annum, right, returns. However, I have a credit card debt of 27%. In case you don't know, APR is about 27%. In some countries, it's 21%. I think Canada is about 21%. It means that I am losing money. So it's just better for me to go pay off that debt. And it's I don't have any business in investing, right? I do not, because I need to, because it's almost like I'm making a loss, because I am helping. If you understand that the credit card is somebody's business, it is a business to the banks and maybe the private money lender and all of those people. It's the credit card is a business. So on them, on their own side, they are making 27%, which me I am paying. Okay. But then I'm now taking my own money to say, okay, another money to say, okay, you know what, I'm investing somewhere. And when I'm investing, I'm getting 15%. It means I am literally losing close to like 12% on top of my money. So it just makes sense for me to go pay off that debt first. okay, before I start saying that I want to invest, because how much I'm paying on the debt is way higher than what I am owing. But when it comes to mortgages that is at low interest rate, like it's 7%, is 6%, that is still makes a lot of sense, because if I am getting a return of 15% on my investment, it means that I can still, and my loan is 7%, my mortgage is 7%, I still have, I'm making a profit of 7% on my investment. So that is the logic of number one, having savings is the first step. So living within your means, right? Focusing on when you get your earnings, focusing, not allow life creep to affect you. That's number one. Then number two is focusing on your debt. Any high interest debt, you want to pay it off. And thank you all for sharing. If you can just and thank you all for the likes. Thank you for sharing. Thank you for the likes. Thank you for subscribing. Thank you for the follow. If you can get the it's, and for those that are new on TT, when I say sharing, it just means press the forehead right here. It's going to bring all your contacts. I also just learned that it's going to bring all your contacts, and then you can share with all of them. Thank you, Jenny. Thank you for the follow. And for the YT community, thank you all for subscribing as well. And that's how you would share, and you would, some other people, you can bring them, you see your contact, and they can come to this. Because a lot of people want to learn this, but they don't know how. I get comments every single day when I have my post, and that's where I am sharing this, and I'm going live. And if you're also wondering, when we say likes, so you can see all those hearts that comes up, non-stop, it's just basically just tap your screen. It costs you nothing, okay? It costs you $0. Just tap it all the way, make it a form of exercise for your fingers, and then it also push this community to the FYP. What does that do? That helps more people to get here. I believe some people got here through the FYP. It gets some more people where when they get here, they can also learn how to build wealth. Okay. So number one is what we talk about, savings, right? Living within your means, okay? Living within, saving at least 50% of your income. When you have your 50%, ensure that, maybe you already have some credit, you have credit card debt or whatever. You want to make sure you focus on that. And how do you focus on that, or how do you pay that off? You can use, like, there are three methods of paying credit, especially credit card or loans or whatever you owe. The three ways are: number one, think about number one is the avalanche method. Look at which one has the highest interest, which one has the highest interest, and you start paying off, because that helps you tackle the highest, the loan with the highest interest. You start tackling that helps you to reduce your payment, or your interest that you pay over time. Okay. The other way that you can pay off is snowball method, and this is almost like you being motivated, right? Getting some level of motivation, getting its level of motivation, because you're starting with the smallest debt, right? Start with the smallest debt and pay off the smallest debt first. Bobby, Angel, Nasesio, welcome. So you're starting with the smallest debt and you are paying the smallest debt off. That's the second. That's the second method. The third method, which I always don't talk about, except you are very disciplined, is consolidation. So it just means that you are getting all of, let's assume you have three credit card debts, or you have three loans or whatever. You bring that into one, and you try to negotiate what the interest rate is. So for instance, let's say it's 27% on this, 25 on that, 15% on one. You come together and you can negotiate to say that, okay, can I pay 12%? But guess what? Whenever you bring it together, they're going to charge you, like a transfer fee. Okay, over time is going to be cheaper for you. But the only thing is that if you are not disciplined, then don't do it, because it's just going to be like you just reclass your loan. That's all you just basically do. Okay, but we've established, so that's how you pay off the loan. But then, because you want to pay it off as quickly as possible, guess what? That is how your wealth is being built, right? Number one again is what? Number one is you're saving 50% of your income as much as possible. Number two is that you are paying off high interest debt. Okay. not aside from mortgage and all of that, you can leave that. But anything above 10%, your focus should be that you don't have any interest. Dr. Cliff, welcome. Thank you for joining. So you don't have any business in investing or wealth build in investing unless you've taken care of that. Okay. But guess what? It might appear that it's not wealth building, right? But guess what? Even debt payoff is building wealth, right? Because you are not paying some interest, you are not losing money, you are cutting off the bleed. So that's what it simply means. So once you have the debt payoff, I mean, once you see that you have already taken care of your debt, it's going and all of that. The third thing that you want to do is what? Protection. What does this simply mean? Protection simply means you having an emergency fund. You wonder, okay, what is an emergency fund, Dr. Lena? Emergency fund simply means that you have, your income, your expenses for a month. What do I mean? Your expenses, your rent or mortgage, if you're an homeowner or you're a renter, your your utilities, right? Gas, water, all of that. Yes, Gianna, welcome, and every other person here. Benid, Jenny, user 6942, Kwan, Anna, I, Becky. Yes. So, like I said, all of you, as we say, the third thing is for you to have your emergency fund. Remember, Jenny, I never said that we are going to be buying that purse, right? User, I never said that, right? I never said that. We are just going to basically focus on what? Our utilities, Ebony, our utilities, our rent or mortgage. We're going to also be paying for the car because you need transportation to go and get that income, right? And lastly, you need to also feed because I, Becky, you know that the kids, or you also want to eat to be alive. Well, yeah, you agree with me, Benid, right? So basically, and that's KSH. Welcome, and thank you for joining. We are talking about how to build wealth the right way. Okay, that's what we are talking about, and of course, understanding that earning it has a limit, but wealth building is what gets you to build wealth successfully. Okay, so having said that, we are going. Thank you, Gianna, for the follow. All right, so we said that we said the third thing, okay, is emergency fund. Why is this important? If in the case of an unexpected event, let's assume that happened, unexpected event. What are unexpected events? Like a job loss, God forbid, but it happens every single day. People are losing. A lot of people started losing their job on a daily basis. That was even part of my why, because I had renters, people that have stayed in my properties for years, that they've never owed rent for one day. And then all of a sudden, last year, it became bad. I had 3 evictions. These are good people, but then guess what? They started having, we had sheriffs visiting and taking their properties out. Of course, because we still have to pay mortgages and all of that. So, and I realized that these are people that are good people, and all of a sudden this is happening. And that's part of the reason why I started doing personal finance on social media space. Because, for instance, somebody that's worked in IBM for 25 years, there's no reason why you should not have income to take care of your family for another 6 months, 1 year, so to speak, because you're earning decent money. Okay. So I realized that there is a gap, right? We were taught how to earn, but nobody taught us how to build wealth because they're two different things. Earning, regardless of you're earning 300,000, 500,000, $100,000 a year, it still doesn't mean that you're building wealth. You are just an earner. You're just a poor dad, right? And that is my why of being here. And thank you all for tapping out the live. Thank you for the follow. Thank you for sharing, and thank you all for subscribing on on YT as well. Awesome. So you are going to be having your emergency fund just in case there's a job loss, there's a medical situation. This happens. We pray it never happens, but this happens every single day. There is major car repair. That's another thing that we don't expect, but guess what? It happens on a daily basis. It happens to people. So, what does this help you to do? Why should you have an emergency fund, and what should you keep as an emergency fund? You want to have at least 3 to 6 months, right? Start with 1 month, right? Have 1 month, 1 month of your rent, of your utilities, of your groceries, and of course of your car payment, or or car note, your car payment, or what's it called, your car pass, your transportation, maybe a bus pass, whatever take you to go and to your job or to wherever you earn, you also want to have that, because what this would help you to do in a situation where this unexpected event happens, you do not have to go back to debt. You don't have to go use credit card. You already have something saved out for this purpose. Okay, it's saved out for this emergency. Start with 1 month, right? That is what it helps you to do. Okay. And because we are building well, we'll see Doville. Thank you so much for the follow. And all, thank you so much for sharing the live. And if you can tap out the live, if you can do the likes, tap like this, right? Like that. If you can do it all the way to 1,000, that would be great. And just so we can also help other people, let's also share the live. Press my forehead and push it out, and you can see the people within your contact. Let them come and learn how to build lasting wealth. Okay. And my friend on Whitey, welcome here. We're talking about building wealth. That's what we are doing this Sunday afternoon. Okay, we are all going to be building wealth the right way. So we've talked about what the first one is, what savings. The second is what we talk about, debt payoff. Number 3 is emergency fund. That's what we are talking about right now. 3 to 6 months would be ideal, but start with 1 month in case you have not even started at all. 1 month. And we understanding that when we are building wealth, right? When we are building wealth, we need to ensure that it simply means that every dollar is working, right? Every dollar is working. Remember, we said you're using asset. Instead of Dr. Lina bringing out the money, it is your asset that is bringing out money. Your salary is coming from your asset. Your salary is not coming from you as an individual. So what does that mean? If you have your asset in 3 forms, asset, you have asset number 1, asset number 2, asset number 3. It is all creating money for you, right? But when it comes to earning, right, is only you. It's not possible for you to be in one place at the same time. It's just one of you that can make income, and that's why there is a glass ceiling when it comes to earning. There is a ceiling when it comes to your income, when it comes to earning. But when it comes to asset or wealth building, it's unlimited. It's unlimited, and that is the greatest part of it, because you can decide not to be there, but guess what, your money is you are still making money, you are still making salary. Just think about whatever you're earning right now. Just think about it. You are not there, but you are still earning that. How amazing would that be? Amazing, right? Amazing. That's fantastic. So having said that, emergency fund, 1 month. That's where we are starting from. Sister Vera, welcome here. Thank you for joining. Thank you for sharing the live. And thank you all for all of the likes. Emergency fund is very, very critical, right? Making sure that where do you put it? You put it in an IU savings account. IU savings account. What are IU savings account? IU savings account is an account, your normal bank account, that gives you 3 to 5%. Some accounts give you 0.01%. But some accounts give you times 3,000 or 300,000% of that value, right? One gives you 0.01%, and that's your Bank of America, Chase, or Wells Fargo. Those one give you 0.01%. If you care to share, put how much you get in terms of savings, returns on your savings in your account. If you have one of those Bank of America, Chase, and Wells Fargo, I get 0.01. That's why I did say 0.01. But if you get something higher, let me know. Now, remember, every dollar must work. Put in the comment section what you're getting. So understanding that every single dollar must work. But the emergency fund, because it is for unexpected expenses. Unexpected expenses, that's what it is for, right? You need to put it we have to put it as liquid as possible, because we don't want to lock it anywhere. We want to be able to access it at any time when unexpected situations happen. Okay, that's why it's called an emergency, right? Now, that is why you put it in that IU savings account. It is your regular bank account, okay? And that's where you put it, regular bank account. So you might be wondering, so what, Dr. Lina, which one are you saying? Yes, it's basically just go on Google. I don't have any preference. Go on Google, top IU saving or best IU savings account in we're in March 2020, 2026. March 2020, top IU savings account. boom, you see the list of them. I know SoFi does 4%. I know Capital One does 3.3%. Okay. Literally paid me $70 last month, and you get your returns every single month. On every first of the month. I know, I think Vero also does 5%, right? Think about it. Bank of America gives you 0.01%. And by the way, I'm still waiting. Can you put in the comment section how much you're getting if you have accounts with any of those banks? Bank of America, Chase, or Wells Fargo. Let me know what you are getting, right? In terms of return. So you have Vero gives you 5%. And in contest, it means that if you put $10,000 for a whole year, with Vero, you will get a $500 free money. When it comes to Bank of America, you get $1. That's the difference. Just so you understand, right? What this means. $1 is what you get versus $5. Okay. So having established that, our emergency fund of 1 month, of 3 months, of 6 months, we're going to be putting it into these savings account. What does this help us to do? It is liquid, but guess what? It is still working. Every dollar must work. It's liquid, it's working, it's giving you between 3 to 5%. Just make sure that whatever account where you are putting it, it's FDIC insured. It simply means that it is protected in case the bank decides to fail or whatever, you are still going to get your money. So it is zero risk. I always call it, zero risk investing. That's what I call it. And thank you all for sharing the live. Thank you all. Let's start the live. Let's like one more time. Let us like one more time. It's just touching the screen. Let us like one more time, and let's power share one more time before we go to the next one. Ebony, thank you all. Ebony, Benny, Jennifer A. Dean, Sister Vera, Dorcas B, Jennifer A. I have two Jennies here. That's so beautiful. Yeah, thank you all for let's continue to like. I know we are all locked in. We want to know how to build. I love it. I love it. But let us just keep tapping, and as we are listening, just so we can have some more people come here, and if you can also share the live, that would be great, so we can have as many people here as possible. Thank you so much, Jennifer, for all of the likes, and every other person too, all doing all of the likes right now. Thank you so much for that. So, having said that, we have the 3 to 6 months of our emergency fund locked away in an IU savings account, just so in a case of a job loss, in a case of a medical bills, or in a case of car repair or any of those emergency, we can be taken care of without incurring additional debt, right? That is the goal. All right. So we've already talked about the debt payoff. So number one is what? Michelle, thank you so much for the likes, and every other person, thank you. Welcome here. Thank you so much for the follow too. Thank you. Really appreciate that. Awesome. So and thank you for sharing. Thank you for the daily admin. That is so nice. Thank you. And if you have been here, for those that are wondering what daily admin, if you've been here for like 5 minutes and you have been enjoying this, it means that you are learning. Grand rising. Awesome. Thank you. It means that you are enjoying this, you're learning this. So it just helps you to also be a part of this community, for you to know when we are. Thank you. You're welcome. Thank you so much, Michelle. Really, really appreciate it. Really appreciate you. Thank you so much for the daily at me, Jennifer. It's amazing. Thank you so much. I am glad that we're able to make impact, because in school we were taught how to earn, right? But nobody teaches us how to build wealth. Thank you so much for the Go Popular. I love Go Populars because it just helps to push this community to the FYP. It just makes the community popular. You're also blessing others because they're going to push more people to this life. And once they push more people, they're going to learn about building wealth, right? Building wealth. We were taught how to earn in school, to earn a skill, but then nobody taught us how to build wealth, how to manage it. That's why, so, people are earning 300,000, 200,000, yet they are still not building wealth. Thank you so much for the repost, Michelle, and thank you all for sharing the live. Thank you all for the follow, everything that you're all doing. Thank you so much. This is super helpful. Thank you. Awesome. So we have already talked about number one is what? Saving 50% of your income as much as possible. Number one, how to build it, and what's the right order. Build, number one. Number two is also to ensure that you are paying off high interest debt. Any debt that is above 10%, you are paying that off, right? Because you are losing money, and you don't have a business in investing at that time. Use any of the strategies, snowball method, avalanche method, or you can also use the what's it called, debt consolidation. Okay, but just be disciplined with it. Thank you so much for subscribing. Thank you all for the follow. Thank you for sharing the live. We have two, by the way, you might hear subscribe, you might hear follow. We have the TT community on one side, and then we do have the YT community on the other side. So it's so great. And if you have not followed me on any of the channel, yeah, Super Kiddo, how are you? If you have not followed me on any of the channel, it would be great that you follow. You would learn too, because there are two different things. There's the one where I have long form videos on YouTube. It's still Money Talk with Dr. Lina. Everywhere on IG is Money Talk with Dr. Lina. Do that. And for my YT community, it's also Money Talk with Dr. Lina on TT. So if you're on TT, please consider following, because I do more live here on TT, and on YouTube. I have long form videos that are going to help you, okay? Help you build lasting wealth. Goal is that by 2036, if you follow all the steps, you're going to be building lasting wealth. You're going to be a millionaire if you are not yet there in that status. Welcome, welcome. Thank you so much, Michelle. Thank you so much for the likes, and thank you all for sharing the live and tapping it out. Awesome. So the third thing that we talked about what emergency fund. Do 1 month first. Once you are able to get to 1 month, then you've paid off your debt. I mean, your debt is being paid off. You have your first 1 month of emergency fund. Then the next thing that we can do is what everybody talks about. I'm going over to you. Awesome, great, Michelle. Thank you. It's so amazing. The third thing that you want to do, right, is what? The third thing you want to do is investing. This is the exciting one. This is where the wealth is actually made. Remember, when you have your emergency fund, when you have your salary, you're saving as much as possible, 50%, you have your emergency, you're paying off the debt. That is just the foundation. Remember, those are foundation of your wealth building. You need to just get those ones taken care of first. Now, having said that, how do you now? The other one is what? Remember, when you are building a house, you lay the foundation. Those first three are just laying the foundation of wealth building. Because if you start building, okay, without the foundation, it's going to crumble. It's going to crumble. That's why those three are the first thing. Savings, okay? Okay, lay the foundation. Yes. Savings, number 1. 2 is what? Getting your debt paid off. Number 3 is for you to have an emergency fund for protection, for financial peace of mind. That's number 3. Then now we go straight to the building. We are laying the blocks right now. We are laying the structure. Now we talk about investing, which is the one that everybody talks about. Remember, it's about building wealth the right way, the right order. Thank you so much. Building wealth the right way, the right order. Okay, so investing. Number 1 is investing in ETF. Number 1 is investing in ETFs. Okay, that's number 4, right? Number 4. But number 1 of investing, the right way is the only. Absolutely, Michelle. The first one is investing in ETFs. Remember, and you're wondering, Dr. Lina, what are ETFs? And I'll come up with an illustration. ETFs are simply, you've probably had a situation where people would say, you know what, I want to, should I buy this stock? Because I heard that a lot. Which stock should I buy? Should I buy Nvidia, or should I just buy Walmart, or should I invest in this, or should I invest in that? And thank you so much for the Go Popular. So how does this simply means that if you're just saying, okay, you, instead of you saying that you want to invest in this or you invest in that, how are you sure that that company that you want to invest in, how are you sure that that is the best company? Okay, and this is what I now teach, okay, in terms of investing or where I put my money. Thank you so much, Press Patron. What I teach that, okay, instead of you picking and choosing, just have a bouquet and have all of those stock. How beautiful can it be? Thank you so much for the follow, Patron Daddy. How beautiful and how beautiful can it be? You know, you are able to invest in everything. Instead of you saying, I want to pick this, I want to pick Tesla, but at the same time, I love but I don't know if Procter and Gamble is going to do good. But then, but I bought my car from Carvana. But how do you, instead of doing that, stop picking and choosing. Stop. Just buy everything. If I tell you that it's possible, isn't that like a solution to the problem? Right? Because thank you, Michelle. Thank you. I'm glad that you are confirming that. Instead of you saying that, oh, you know what, this is Tesla, but then this is not Nvidia. Okay. Instead of doing that, thank you so much, Michelle. Instead of doing that, okay, I just say, okay, you know what? I'll take Nvidia. I'll just look for the top 500 companies in America, top 500 company in United States. Isn't that beautiful? And you'll be like, okay, but Dr. Lina, how do I know that this is the right thing or this is the right way? Okay, I do because, of course, I'm a doctor, and part of my doctorate degree, one thing that you do when you're doing your dissertation is triangulation. Okay, when you're doing your dissertation, when you're doing your analysis, it's triangulation. It means that you have to have one thing to corroborate the other, one fact to corroborate the other, and the other corroborate the other to make sure that it is definitely, you are able to achieve that goal. This, and this, right? This, and this. And I've done that, okay? And that's why I can say this. I personally, when I was picking and choosing, buy penny stocks, buying do day trading. I've done it all. Do day trading, did option trading. Guess how much I lost? I lost over 100,000. No capping. That was years ago, about 4 years ago. And that's why I said, okay, there has to be a better way because investing is not even an option for me. Not investing is not an option, okay? But I cannot, okay, you lost money too. Not investing is not an option, okay? But then losing money does not make sense either. 100,000 is not, that's almost a year's worth of people's income. People's earning every single day, right? Working 9 to 5, 365 days of the year. Then you lose everything in one, over a space of 1 month. I said no, but of course I'm not going to run away, right? Because not getting a result, it's not an option for me. It has to be achieved. So what did I do? That's how I came about, do simple ETF. Keep it simple, right? Stop picking and choosing. So I stopped picking and choosing. I said, okay, where I went to research, I said, so where does the multimillionaire, we invested ourselves, so we absolutely. I said, where does the wealthy, the multimillionaires and the billionaires, where do they put their money? And you should just stop by to say hello. You've got a, oh yeah, absolutely. Past Patron, thank you so much for sharing the life, and thank you for stopping by. Amazing. Right. So I said, okay, where does the multimillionaire? I went on Google and do that on Google right now. Just check that and see where does the multimillionaire and the billionaires, and we're rich. Oh yes, absolutely. That's the goal. That is the goal because wealth building is what makes you rich, right? Any will just get you comfortable, but wealth building is what makes you rich, right? That's where we want to be. Okay. See you later, Press. Thank you for stopping by. Okay, and thank you so much for that, Michelle. So what am I trying to say? So I checked on Google, and you can check it right now. Go on Google and I'll do it as well. Where does the multimillionaires and the billionaires, remember I did not say millionaires, I said multi. So because that's where we are aiming to be, multimillionaires and billionaires. Yes, put the money, and you can also check the same, put the money. Okay. All right. So the first thing, hello. Thank you so much. You'll pay attention. Thank you so much, Michelle. So the first thing that is here is real estate is number one. Real estate is number one. Number two is stock and mutual funds, right? Stock and mutual funds. Number three is private equity. Cash and cash equivalent is the third one. You know, and I realized where I made my mistake, right? Immediately, I realized where I made my mistake. Alternative investments like metal, what's it called? Like gold and all of that. Cash and cash equivalent. Some millionaires hold significant portion of their asset in cash and cash equivalent for liquidity and to take advantage of investment opportunity, private equity. When I looked at it, I said, okay, this is where I made a mistake. There was nothing called, there wasn't anything like day trading. There wasn't anything like options trading. There wasn't anything like, what was the other one that was options trading, day trading, and penny stock? There was nothing like that. I said, okay, this is the reason why I lost 100,000. And for that reason, that's when I said, okay, number two, I'll take the first two, right? Take the first two, and that's where I will put my focus on because there's a reason I want to be number one, number two. So number one is real estate, and you can Google it yourself. So real estate, many millionaires and billionaires invest in residential and commercial real estate, which is long-term investment that retain value and generate income. Number two is stocks and mutual funds. These are popular investment choices for wealthy, offering potential for high returns over long term. So those are two, right? And that is where I said, okay, this is how I am going to do it. Okay, understanding that this is how I'm going to do it because I have already understood that the multimillionaires and the billionaires are already, this is how they have built their wealth. Okay, all right, understanding that, I said, okay, with the stocks, I went further with the stocks. So how do they, what sort of stocks? Because there's also the stock market. Then I listened to Warren Buffett's video, and Warren Buffett is the lord of, they call him the lord of investing because he's made so much money. He has his own brokerage firm, which is super expensive, right? I think he's one of the most expensive right now. And when they asked him, how do you invest? Which stock should we buy? All of those questions, picking and choosing. And he said, there's no point picking and choosing. It's already been done for you. Just invest in simple index funds and ETFs. And I said, voila, that's it. That is it. Okay. I said that is it because I've already done the search on Google. I always say that whenever you're doing anything, whenever you're doing anything, especially on the social media, be careful. Trust but verify. I always say this. That's why I always say go and search it yourself. It is not, I can read it to you, but go search it yourself. Trust but verify. That is very, very crucial because people can say whatever. I will tell you, be careful. So I went back and, I've seen Warren Buffett. I've gone on Google. It's not like I'm listening to, I've seen it. And then lastly, I was like, okay, so which of them? What is it here? Which of them? Thank you so much, Michelle. Which of them? I said, then I looked at it. When I looked at it, I said, oh, okay, I get it. This particular one, ETF, and I looked at it. There's one, S&P 500. It means top 500 companies in America. So the best 500 companies based on the rating in America. S&P 500, it says it's returned between 8 to 12% in the past 10, 20, 30 years. So guess what? I had the trend. So that's my triangulation. Warren Buffett, Google, and of course I did, what is the trend? That's it right there. So it means I cannot get it wrong. And guess what? Since the time I started putting money in ETFs, in index fund, I don't do index funds, by the way, in ETFs, I realized that, okay, I did not lose money. My money started growing. So it's not, so I realized, yes, it is not about the picking and choosing, okay? It is not about picking and choosing. It's about investing in the right place, investing, getting all of them. What does this do? And it also makes sense. What does this do? You are spreading your risk. You're welcome, Michelle. You are spreading your risk. It simply means that instead of you saying that you want to buy NVIDIA, what if, oh, awesome, Michelle, I should be in your life. And by the way, guys, look at Michelle up. Yeah, Michelle, thank you so much for stopping. I would also be in your life. Look her up in, look her up and we can all join our live. Let me know whenever you're live and we can also do some form of collaboration. But thank you so much, for being here today. Really appreciate it. And every other person that is here, really, really appreciate that. Michelle, Ebony, Jennifer, Sister Vera, good to see you. Bonnie, Drake, Audrey, Miss Tender, welcome, and thank you all for being here. Really, really appreciate that. Super Kiddo, Meredith, how are you from the YT community? Welcome, welcome, and thank you all for tapping the like. Thank you so much for the daily at me. And you're wondering, if you haven't subscribed on YT, you want to do that because trust me, you are going to build wealth. Okay, and on TT, if you haven't, you want to do that, okay? Because the goal is for us to build wealth. Goal is that we are building $1 million community, a millionaire community in 10 years. 2036, if you follow the strategy that I've worked for me, I've used it before, I've used it for other clients. The goal is for you to also build that if you follow the steps, okay? Today, we are talking about any versus wealth building and, of course, building wealth the right way because there's something called foundation. There's also something called building. If you start building without the foundation, the house is going to crumble. And that's where you hear people say, oh, you know what? I'm earning money, I'm investing, but I'm losing money, right? Don't be like me that lost 100,000, and that's why I'm teaching so that you can also learn that and not make that mistakes. Okay. And if you're just meeting me, I am Dr. Lina. I'm a doctor of business and technology. I'm a serial investor. I manage double-digit real estate portfolio. I invest in simple investing, something that is simple in terms of ETFs and all of those is what I invest in. If your goal is to get rich quick scheme, then this is not for you. Here is about building lasting wealth. Please don't forget your daily. Yes, please. By the way, do not forget. Thank you so much, Sister Vera. Do not. She's only 6 away from meeting our goal. Yes, please do not forget your. Thank you so much for that. Thank you so much for that, Sister Vera. Really, really appreciate that. Okay, so having said that, we have said ETF is the third. ETF is the third. And if you're wondering how to do daily at me, if you go in the, I think is it in the bag somewhere that right there, right? It's in the bag somewhere right there. It's going to cost you 1 coin, and 1 coin is 1 cent. Okay, what that's help is they're going to push this community into the FYP. Then you have more people to come learn how to build wealth, right? Earning is different from building wealth. We understand that. It costs you 1 cent, okay? And let's keep tapping. Thank you so much, Sister Vera. Really, really appreciate that because you are also blessing others. That is the way you can also pay it forward. Really, really appreciate it. I really, really thank you for that. Okay, having said that, so we do have the, what's the third one? The fourth one, right? The foundation is what? We talked about your, savings from your income. 2, we talked about paying off high interest there. 3, we also talked about how you also have your emergency fund. Then 4th, we're talking about the first investing strategy because that's the building right now. ETF is number 1, okay? ETF, simple ETF, okay? And it's just a basket of fun, basket of all different stocks in here. All different stocks in here is what we have here. So you have Nvidia, you have, Google, you have Meta, you have Amazon, Apple, all of them, top 500 companies. You can go on and search right now. You will find the top 500 companies, S&P 500, and you invest in it. And you're wondering, okay, so how do I buy it? Simply, if you're in the US, you can go on a Fidelity app, download the Fidelity app, download Vanguard app, or download Charles Schwab. Those are the top 3, just like your Bank of America, Chase, and Wells Fargo. Those are the top 3 companies, brokerage firm, and you can buy it in any of those. Okay, you can buy in any of those. Those ETFs right now, S&P 500 returns between 8 to 12%. 8 to 12%. As a matter of averagely for the past 10, 20, 30 years. Last year, it returned 18%. It simply means that if you have put $10,000 last year, you would have gotten $1,800 on your money. That is free money. Remember, it's better than IU savings account, which is 3 to 5%. And it's almost like you are guaranteeing your money because if the trend has been like this, Corey, thank you for the follow. If your trend has been this way, right, it's 10, 20 years, it says return this, then the chances of it returning the same thing for you is always very high. So, and for me, because remember, it's protection first. There's no point losing your money. It's even better for you not to even save at all if you are losing your money. So protection comes first. protection comes first, and that's why I do simple ETFs. S&P 500 is number one where I put my money. So you can open any of those accounts, whichever one is comfortable that you like, Fidelity, Schwab's, or what's it called, or Vanguard. You can buy on any of that. Just and go on Google S&P 500. There are different ones. There's the one for VOO, which is Vanguard. There's the SPY, which is I forgot the brokerage name. And then there's also the IVV. All of them has returned averagely the same thing. The fee structure is the only thing that is different. It might, maybe one will return maybe, let's say 11.99, another one will return 12.5. It's just basically the same. Any of those three, I personally put my money there because I am telling you what I do. It's not just about what I learn in the book. I am also telling you what I do, right? If I don't have it in my portfolio, I will not even be talking about it, okay? So that is the ETFs, right? Another ETFs where I put my money is the NASDAQ 100, with the top 100 technology companies in the US. It's another one. This returns higher. It returns more, okay? But the higher the risk, is also the higher the return, of course, because it returns between 18 to 22%. But guess what? The risk is high, the return is high as well because it's technology. Remember, let's assume something happened with the chips or whatever. Guess what? It goes down. But that doesn't mean that it's not going to come up. So always, whenever you are investing, one thing that helps me, whenever you are investing, especially since we know that we are here for the long haul, we are not here to day trade like I was doing, right? We are not buying penny stock. We are buying solid investments. That's what we are doing. There's no reason for you to panic. When you do, it's until when you sell. So let's assume that, okay, today, VOO, for instance, is at 628. And tomorrow, for some reason, because somebody woke up on the wrong side of the bed and decides to tank the market and decide to have, the tariff or whatever, and guess what? It now goes into let's say it goes to 570 from 628 and you bought at 628. You do not have any reason to panic, so to speak. You don't, because until you sell it, it's just numbers. It's just numbers. Until you sell it, that is when your loss is locked up, is locked in. But you can just be looking at it. Oh, it has gone down. Oh, okay. But guess what? If you don't need the money tomorrow, you don't need it in 5 years, or you need it in 5 years. Why are you worried if it goes down today? Because guess what? It is going to go back up. So far, whatever you are buying is solid. You are not investing in a solid. You are not investing in a penny stock, right? That can crash tomorrow. You are investing in top 500 companies. Top 500 companies in the United States. That simply means that is almost backed up by the US economy. That's basically the way I look at it, right? I'm not saying it's necessary. Of course, go do your research. I'm not your financial advisor. I am just sharing what I have learned and both in the books and of course what I do in my day-to-day life, okay? So that you can also use the same thing to build wealth, okay? So the same thing with the NASDAQ 100, which is QQQ. The ticker symbol is QQQ. Look at it, okay? The third one I also do is the dividends, SCHD, right? SCHD is also another beautiful one. SCHD is another beautiful because SCHD is top dividend paying companies. So companies like Johnson and Johnson, Procter and Gamble, these companies have returned the same thing over and over and over. They've returned dividends. They paid dividends over and over and over again. So the difference is that the fact that you own the stocks, not this class of stock, right? Procter and Gamble is a stock, right? Not an ETF, right? It's just a company that pays dividends. The fact that you own Procter and Gamble, for instance, every single month or every single quarter, they are going to give you some money. It's called profit sharing, right? Profit sharing is what it's called. So, yeah, because you have that, because you own one unit of Procter and Gamble, they would, whenever they make profit, they sell Tide or they sell Always or whatever. Whenever they make profit, they're going to give you a portion of it. That's what dividends is called. So when it comes to dividend, like SCHD, you are going to be not only be getting increment on your money, you are also going to be having some cash flow. So if your goal is, you know what, I have, let's say I have $200,000 that I'm not, I mean, I know a lot of nobody has the 200 to put in there, but let's say you have $200,000 in your Roth IRA, you can just decide to say that, you know what, I want this percentage of money every single month to feed my lifestyle, right? That's the kind of investment you can have, because your principal will still be there, still growing. If it keeps going up, your money is still good. However, it still pays you every single month. Remember what we talked about earlier, earning, right? It's you being there. If you are not there, you are not earning any income. So your salary, your 9 to 5, that's what it does. But here, right, which is asset, SCHD, like the Procter and Gamble that I just talked about. You are not there. It's your money that is there, but it's generating money for you. That's it. You can easily just, if your money is this much, if it gets to a certain point, you can easily replace your something that requires your person with, you don't have to be there, but you are earning money. Okay, so, and that's where wealth building becomes, there's no cap. Like I said, there's no cap to what you can make. So that's the third one, and that one is called SCHD. SCHD is also a basket of all of those kind of dividend paying companies. Remember, we are not buying a single stock, we're buying a combination. A combination of it is what we are buying, because that helps us to do what? It helps us to spread our risk. Let's assume Procter and Gamble goes down, and Nvidia is going up because tech is also going up. But let's even assume Nvidia is going up. Guess what? Retail is doing well. If retail is not doing well, petroleum is doing well. There's Exxon, there's all of those companies. Just imagine you using your $100 to buy 600 companies or 700 companies. Then your risk, it's almost already spread. You spread your risk. That's assuming that's what I did with my $100,000. There is no way I would have lost money, because I would have spread my risk across board, right? Across board. And that is why it makes sense, because you might be wondering, so why does the multimillionaire, why did they put their money in index fund, or why did Warren Buffett say put money in index fund? That is the reason, because trust me, the multimillionaires and the billionaires have worked so hard, and they don't want to lose a penny of their money. That's the reason why they would spread their risk, okay? And then they will put certain portion to go and do the risky things, to do, investment capital and all of that. But their larger portion, they put it in something that is steady, generating money for them steadily. So ETFs, that's the third one. So I have what? S&P 500. I have the Abiye, welcome, and every other person. Thank you for the follow. Sister Vera, thank you all for all tapping the like. Really appreciate that. I hope we are learning. I hope we are finding it valuable. Sister Vera, Bonnie, Jennifer, A. Awesome. Benny, Drake, Abiye, baby, April. Hey, I am also an April born, by the way. And thank you, Abiye. Thank you so much for the daily at me. That's amazing. Thank you so much. Really, 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 really appreciate that. Really, really appreciate that. Okay. Uh, Okay, and I just wanted to pin this Sister Vera's comment right there. If there's anyone that's, you haven't got to your daily admin, it just cost you one coin. That would be great if we can get to that. Okay, awesome. So we talked about we've talked about VOO, we talked about the QQQ, we talked about the SCHD. Okay, SCHD is the third one that we talked about, and of course there's one that I talk about, but I do not really have put in my portfolio. Remember, I share with you, I am building my own wealth, okay? So that if you want, it's helped me, and I'm just sharing that you can use it, you will get the same result. There's something that is called, when I worked in Procter and Gamble for 8 years, and there's something that is, we always talk about, shamelessly reapply. There's no point reinventing the wheel. If there's no point reinventing the wheel, if it's worked, and you know that it's worked, just shamelessly reapply. Okay, and that's what I shamelessly reapply for the multi-millionaires and the billionaires. I see it's working for me, and I trust that it's going to also work for you. Okay, So the last thing, sincere, thank you so much for the follow. So the third thing that so we talked about the third, right? Now the one that I do not put money, and I would explain the reason why I do not put money, but you can put money, is real estate. Real estate is the second thing. I mean, it's actually the first thing when we say where the multimillionaires, okay, where the multimillionaires and the billionaires keep their money. Number one is real estate. Real estate, okay? It said many millionaires and billionaires invest in residential and commercial real estate, which is long-term investment that retains value and can generate income, okay? Now, that particular one, I do not put money into it. I do not buy it as stock because I am so heavy into real traditional real estate. So I manage double-digit real estate portfolio, okay? So it already tells you how heavy, in terms of my portfolio when it comes to that, right? And then because I always try to spread my risk, okay, because I don't want to put so much in one sector. So if one sector goes down, I want the other sector to also, if they are going to be up, I am still good. So that's the way I actually am. Thank you all for tapping out the live. Thank you so much for tapping out the live. And thank you for sharing again, push my forehead, on the screen, and the contact will come up, and then you can share with everybody. And if you are new to TT and on YouTube, you might wonder what we have the TT community as well, right? If you're wondering, just tap the screen. It costs you nothing. And by the way, if you've been here for 5 minutes and you find this very helpful, consider doing the daily admin. It costs you 1 cent. 1 cent is what it takes from you, and then that would help you. You would have a lot of benefit, okay, as much as it benefits this community, because it pushes us to the FYP, okay, and then so many people will be. We have much more people in this life. They will come learn about personal finance. It will almost be like you paying something forward, helping some other people to come and learn about their personal finance on this beautiful Sunday. And by the way, it's already the first quarter. It's coming to an end. So really, really, before we know it, it's going to be summer. Before we know it, so now is relearning and of course taking actions. Thank you all for tapping up the live as well as getting your daily admin and the follow, and for the YT community for the subscription. Thank you so much for that. Awesome. So we talked about that. So now I talked about why I am not putting money in there, right? But there's the ETF, right? That is for real estate. Now, this is a beautiful way for if you're a beginner investor, right? Beginner investor, this is a beautiful way for you to get into real estate as well. So buy simple ETFs for real estate. So you remember that you see all of those high-rise buildings, you see the malls, you see office spaces. You might be wondering who owns this. There's so many companies. There are companies just like you have like a Walmart. It's on the public traded exchange, right? It's there. Just the same way we have property companies, right, that owns all of those things, and then it's on the stock market as well. But then you're also, just like we are buying, remember, ETF is a combination of so many stocks, so many companies. You're also buying multiple of these real estate companies. So it's a way for you also to diversify your risk, because you are having tech in your portfolio. So let's assume you are investing $500. You're investing $200 in growth like S&P 500. So the entire 500 companies in the US. Then you are having another $100. You have it in technology, right? Then you also have another $100 in dividend paying stock, and you are enjoying cash flow. But then you also have another $100 in real estate. That is your $500. You can do the same thing with 50,000 or whatever, just in that same level, right? That is the way you actually build wealth, right? Because guess what? It's impossible for all of them to go down at the same time. And even if they go down, you've already edged. That's what is called edging against your risk. You've already spread it. It's not possible. It means that all of the harms of the stock, it means that simply the stock market has failed. If everything goes down, it means the stock market has failed, seriously, or everything has failed. And you can simply, even guess what, you can simply buy the entire US market, or you can decide to say that, you know what, let's assume something happens in America. I mean, with everything happening right now, and you say that, you know what, I don't even want the United States, or I buy something for United States. I do 50% the United States, the entire stock market in United States. But guess what? If something happens in United States, what can I even do? I can say that I will buy everything international outside of United States. You can split it that way, but ultimately you're just spreading your risk. Or just go on Google. This is what I do. Go on Google and say um, top ETF in 2025, or what's a top ETF year to date, right? And just simply go invest there. Simple. And that's, see, a lot of time why people don't invest is, number one is procrastination. Number two is I don't know where to get started. I don't even know the account. So now you know, now you know the first one. I cannot help you with procrastination. It's all on, if you decide not to do it. Number two is I don't even know how to get started. Open any of those three accounts: Vanguard, Schwab's, and or Fidelity. Any of those three, or you can go and open Robinhood if you just want to just try, right? Just open Robinhood on your app, and voila, you got it there, right? That's problem number two result. Number three is, which of the stocks should I buy? Number three result, just by simple ETFs. Stop picking and choosing. Stop. Just think about it as a buffet, right? Everything is there. Like Warren Buffett, right? Everything is there. Not a is it a la carte, right? Don't do just get everything in one basket and spread your risk. And the last thing, right? The last thing is, let compounding do its job. Stop panic selling. Stop, remove the emotions that comes with it. If you see the stock market goes down, whatever goes down comes up. Always remember, whatever goes down goes up. Think about it that way. All right. And that's what you do. Okay. So the two things I cannot help you with is procrastination. I've already told you where to put money. I've already told you how to open an account. Number one, procrastination, I cannot help you. Then the last one is emotional. The only thing I can tell you with that emotional is, whenever you are panicking, go delete that app. Just delete it off your phone. I've done it before. Delete it. Was it April 8th last year, which was my birthday, April 8th, and the stock market was at the lowest. VIX, which is what captures the fear in the market, VIX captures the fear in the market, and that went all the way to 52%. So the stock market was at the lowest. Was that when, what was it? I think that was when our Mr. President was started with the old trade war and the tariffs and all of that with China, and the stock market tanked. But guess what? The stock market has almost, you don't want to know where it has been since that time. Is at the top right now. The top stock market is at the top of the top. So at the end of the whole thing, so why are we trying to choose? Because you are not God. Like I said, I am not God. I don't know. Even the best of the best real estate, I mean, investment analysts, they do not know. They make mistakes. They do not, with the war and everything, everybody would think that the stock market will be at the barest minimum. Last time I checked last week Monday, it was at the top. All everything was green. So understanding that, what do you do? Just simply do, and stop. Do not panic. Do not panic sell. Just give it time. You bought something solid. You've done your research. Just do it. That's it. All right. So that is number three. And that's number four. Number one is what? You are saving. Number one, how to build wealth. Okay. And how to do it the right way. The fourth, number one is what? You are saving 50% of your income. Close, at least you're trying to save 50%. Okay. Because you are not allowing lifestyle creep to take over your life, right? You are focusing on the things that are important. And Sister Vera, is what? Number two is, you are paying off high interest debt. Okay, that's number two. Number three, e-bonity. It's basically you are also having your emergency fund stock away in IO savings fund. IU savings account, like a Vero, so far any of that is giving you 3 to 5%, but ensuring that you have your it is FDIC insured, so you don't lose your money. And beneath number 4, we are talking right now, we are just talking about the investing part, which is we're laying the building right now. The first 3 is the foundation. Number 4 is the investment itself. And what is that one? We talked about ETF, simple ETF, basket of fund rate. Okay, it's basket of funds. Okay, simple ETF like a VOO, IVV or SPY, which are S&P 500. Okay, BRIM, and of course we did Brimo Bashar. We're talking about SCHD. We talked about the Nasdaq 100, which is QQQ, and then we also user 55. We also talked about the real estate, having to have real estate. Yeah, Abiye, thank you so much for that. We did talk about that as well when it comes to having real estate. And the last one, but not the least, okay? The last but not the least, and I just wanted to have my, just making sure that we are following the plan. And because I wanted, okay, we talked about S&P 500, we talked about total market ETF, consistent monthly investing. Oh, thank you so much for the follow. Thank you all for sharing the live. And if you can share the live one more time, and then press my forehead and share to everyone within your contact. One Credit Guy, you welcome. That's a very beautiful name, One Credit Guy. And of course, thank you all for tapping out the live. Thank you so much for tapping out. If you haven't gotten your daily admin, consider doing that. It costs you 1 coin. Okay, 1 coin is what it costs you. Okay, and then we can have some more people in this community. And remember, I think you can also claim, I believe you can claim it back. So if you go where you have Money Talk with Dr. Lina, you will see something that say claim, and then you can claim out your points. Well, that's what other people told me as well. And YT community, in case you're just, I'm just talking to the TT community because that's the structure here. We have 2 communities here today, and that's what we're talking about. So the last way where you build wealth, okay, where we build, number 5 is real estate, okay, and that's where I manage double-digit rental portfolio. That's what real estate is. So, and all of this I'm saying is step by step. Remember, it's foundation, right? ETF is a fantastic investment tool, is a fantastic asset. Real estate, on the other hand, is an amazing investment vehicle. Why do I say this? Real estate is the only asset class, and of course, I'm not a realtor, I'm a real estate investor. It's the only asset class that pays you in 4 different ways. You get cash flow, meaning the difference between your mortgage and the tenants, the rent that the tenant pays you. Mortgage that you pay the bank, so you buy the house, somebody else is paying using the bank's money, somebody else, you're using the tenant's money to pay the bank, pay off for the house. Girl, guess what? You are the one that owns the house. The difference. Please remember to tap the screen. Tapping is clapping, and add content. Thank you so much, Sister Vera. Really appreciate that. Cash flow, it's number, that difference, right? The mortgage is 1,500, but you get a rent of 2,000. The difference is $500. That $500 is what you get as your cash flow, right? Amazing. A lot of time, that's what a lot of people focus on. And I always say that is actually change compared to what you get from real estate. Change. Just think about it that way. It's like 10% of the 100% return that you're getting. The other thing is, the second thing that I always talk about is appreciation. I mean, not even appreciation. So there's the cash flow, there's equity. Okay. My friend Johan, welcome here. Thank you so much for joining. Okay. So the second thing is equity. What is equity? Remember, you're paying the bank using the tenant's money. You're paying the bank 1,500. That 1,500 reduces how much you own the bank. Let's say, assuming you owe the bank 200,000. Every single month you are paying the bank 1,500. It reduces how much you owe the bank. Reduces your 200,000 every single month by 1,500. And at the same time, you are increasing your ownership in that house. If that house is worth 300,000, and then after 5 years, let's say you have paid another 5,000, right? You bought it 200,000. After like 5 years, it's now, let's say, 300,000. but then you have also paid a mortgage, using the tenant's money of another 50,000, or the 1,500 that amounted to 50,000. It means that you have 150,000 left in that is equity, and 150,000 that is a loan, that is a debt, right? That 150,000, you're like, oh yeah, but it's just money in the books. No, this one is not money in the books. You can actually take it out. There are different strategies that you can use in taking it. Let's assume, I always say that you can use this to pay college loan. That's because that's actually the way I got into real estate, because I was looking for avenues of getting my kids for kids education, and I was doing 529. That wasn't making sense. It was almost like it was not making sense. Let me know if you're doing 529 and it's making sense for you. But for me, it did not make sense. I did it for a couple of years. It did not, and it was so bureaucratic. I realized that, okay, if kids get scholarship, all of those. So I just said, you know what, there has to be a better way, right? There has to be a better way, and that's I got into real estate. So what that simply means is that, let's assume that I have 150,000 in terms of equity, right? What simply means is that I can easily take that money when my kids want to go to college, or I want to use it for a project, or I want to buy another property. I can simply just take money. How do you take money? You can do cash out refinance and just totally just say, you know what, I want that 150. Or I can just say, God, give me credit against my equity, which is equity line of credit. And just, it's almost like your credit card, and say that, okay, that entire 150,000, I think they'll give you about 75% of it. So I can say, okay, I want 125,000, 120,000 of that money. It's just there. It means that I can use it. I can use that money any single time. It's not just sitting there. It's almost like it's in my account. I have a credit. I don't need to beg them every time. They're going to approve it one time, and I can use it as every single time that I want to use it. But remember, it's also credit card. It's almost like a credit, but I can use it to repay it. So I can use it to buy another property, okay, but then pay it off, right? And that's the other way. So equity is the second way. Then the third way that it pays you is appreciation. Remember, I talked about the property being 200,000, and then in 5 or 7 years, it's already 300,000. That 100,000, it's appreciation. So if you buy properties in the right places, in the right location, the property doubles its value every 10 years. Trust but verify. Go on your Google and search. You would see whatever thing I am saying. The property we bought in 2017, today we are still in 2026, it has already doubled itself. So I have verified that on my own part. Thank you all for tapping out the live, and thank you all for sharing. Thank you for those that have not gotten the daily at me, then considering doing that. And of course, thank you all for the follow. So that's why I say that is the biggest one, because I remember what we said earlier. Asset, there's no limit, there is no cap to your income, right? Your salary, your earning, or your paycheck, whatever we call it, 9 to 5, there is a cap to it, okay? But your asset, there is no cap. So this is what I meant. ETF is one, but now look at the real estate. If you buy, people buy assets, and guess what? The asset is growing crazily, right? Imagine if the property is growing every 10 years. It means that by the time you are paying off the mortgage in 30 years, the property is almost times 3 of its value. That's what it simply means. So it means that you are tripling, you are quadrupling, or whatever, your money. And that is how there's no limit, okay? There's no limit to how much you can make. That's basically what that means. So appreciation is another one. Then the one that I always call the icing on the cake, the one I love the most, that nobody tells you, it's like a secret. It's like on a cult that nobody talks about. But here, there's no gatekeeping, because I am going to share it with you. It's tax benefit. Maybe you would have heard your friend, or you would have heard people say, you know what, I need to buy G-Wagon. Maybe you'd have heard, my business is paying for this G-Wagon. That's it. Or, I need to buy a real estate property. I need to buy it before the 31st. There's always a rush, but before the 31st, that's the reason. Because simply put, if let's assume that, especially for high income earners, let's assume that, okay, you're earning, some of us are already having panic attacks. Now that April 15 is around the corner, and they don't want to talk to their tax consultant, you will talk to your tax consultant, because you really don't have a choice. You still have to pay Uncle Sam. But you do have a choice, okay? You do have a choice. It might already be too late for last year, but you can have a choice in 2027. How do I mean, Dr. Lina? It simply means that if I bought a property last year, let's assume that, of course, on that property, I pay taxes on it, right? I pay taxes on it. I pay taxes, I pay property tax, I pay insurance, I pay interest. Oh, and of course, it became vacant at some point. Then I lost money. And then, you know what? It got damaged. There was a leakage somewhere. Then I had to fix the house. All this, what if I tell you? But on my W2, because I make so much money, I need to pay Uncle Sam $20,000 because when they file my taxes, I need to pay back by April 15, 20,000. But on this side, I have everything that I've calculated now is 17,000, right? Everything that I owe on this related because I also fixed the property, because the roof is also or HVAC is whatever. Okay. This 17,000, I'm supposed to return 20,000, pay Uncle Sam 20,000 on this side. I'm going to take that 17,000 on this side and remove the 20,000. How much do I owe Uncle Sam? Who wants to put in the comment section? That's the sweet part. Put in the comment section how much. So it's 20,000 I owe on W2. I'm supposed to pay Uncle Sam 20,000, but when it comes to real estate, I am owing 17,000. So how much do I owe Uncle Sam? Anybody put in the comment section. Joy Unspeakable. Put in the comment section. Let me know that we are following. And I'm learning the things that they told me because I could be a teacher. Just give. I just want to make sure that we're following. Uncle Sam, I'm owing Uncle Sam 20,000, right? And by the way, Uncle Sam is IRS, right? IRS. I'm owing IRS 20,000 by April 15 because they filed my taxes and I make so much income last year, right? But based on real estate, I had property tax, I had insurance, I had interest, I can claim all of that. And there's also accelerated depreciation, all of that. Everything amounts to 17,000 in terms of expenses that I had on this property. So 17,000 and Uncle Sam, I'm supposed to pay 20,000. What's the difference? 20,000 minus 17,000. What's the difference? Let me know if I have my friends here are mathematicians. 20,000 minus 17,000. Sister Vera E. Boni, Jennifer A. Benny, Drake, Pramu Bashir, user 55, Benjamin Bossade, Velora, Joy Unspeakable. Welcome. Yeah, 3K. Yay! Awesome. See, I have smart people. So it just means that I got 3,000 is what I owe Uncle Sam. That's it. So tell me, 17,000, that 17,000 is actual cash. Think about it. All that it takes me to buy a $50,000, a 200,000 property, my next property, which is, let's say 200,000. I typically stay within that range. 200,000 with 20% down as investment property is what? Is $50,000. In 20% plus the closing cost or whatever is 50,000. But guess what? I already got 17,000 back from my tax. How much do I need left? I need 30,000. So that is how wealth is built. When I say that, when you are building asset, is unlimited. And remember, I'm also still getting cash flow. Remember, I can still pull some from that property. I can still pull some equity. That is how I get my 50,000 for down payment. So when it comes to ETFs and real estate, when in terms of investing with ETF, you are already, think about it as a kid, right? As a child. There's a time when a child is crawling. So your savings account is when I say a child is crawling, right? Then when you do ETFs, a child is crawling, meaning 3 to 5% in investing. That's what you get in your savings account. But then when it comes to real estate, when it comes to ETFs, you are walking. That child is beginning to walk, is a toddler walking, not crawling anymore. But when you come to real estate is what is going to make you build wealth, like you are running. It's also like a good business. Like, think about, you bought a McDonald's franchise and all of that. You are basically running, or and then you can make it even, you can also be, what do they call, track, because there's running, running during exercise is a different thing from running during track and you're doing all of that. That is another level, because when you start investing in commercial properties, you start, buy lands, and you're buying, you know, you're buying lands, and you do all of those things. It just makes the journey faster. That is how you build wealth. So it's on this level. So real estate, number one, okay. Number one is what? You get your income, you're saving. That's number one. Number two is your debt. You're paying your debt that is above 10%. Any debt that is, focus on it using any of those methods, avalanche method, snowball method, or you're using what's it called? You're using the consolidation method. Number three, you are making sure that you have your emergency fund for protection in case there's an emergency. You put it in an IE savings account, give you 3 to 5%. Number four is simple ETFs, right? Simple ETF like an S&P 500, like a dividend ETF like SCHD, like, and of course maybe technology QQ, or you can also put real estate. But then the last one, which is going to take us to the overall thing that everybody's chasing, or the main goal of building wealth, which is, then the last one is real estate. Okay, real estate pays you in four different ways. You have cash flow, you have equity, and of course you have appreciation, and the tax advantages. That is the icing on the cake. My dear, if we have all of this, guess what we are all chasing? What you are all chasing is what? Financial freedom. Financial freedom. That is how, when you build wealth, you're going to build financial freedom. Okay, when you earning, you are not able to build financial freedom, because you would remain there and continue to do, the hamster will do the rat race every single day. You'll be comfortable, you'll be, I mean, especially if you are, living, you're earning decent income, and you're getting, you're paying your bills and all of that. But it means that you'll be doing that consistently for the next till you're 65, right? Where you can no longer wear a bikini on vacation. You cannot, right? But with wealth building, you do not have to be there. It's your money that is working for you. Okay. And what the difference between the two, the main difference is, wealth building gives you financial freedom because it doesn't require you to be there. If you buy a property, right? Either right now, I have tenants in the house. On the first, they are paying me. I don't have to. There are properties that I do not. Most properties, I'm not. I don't even step on the street for a whole 3 months, because I do inspections every 3 months or 6 months. Right? There are times when, if the tenant has been there for so long, I am not there on for 6 months. I don't even go into that street for a whole 6 months. Right? But guess what? Every month somebody is paying me, right? That is the difference. There's no cap. I can do that. If I do that for one property, I can do it for 10, I can do it for 20. And, unlike when it comes to earning, it can only be that one income that you are getting. Of course, you can get other income, but all other income doesn't even, would not require you to be there, right? But it's just one you cannot replace, you cannot replicate. You're not a robot that you can replicate it. Anyway, we totally understand. So in terms of financial freedom, that is how you build. Asset is what is going to help you to build financial freedom. So meaning, basically, financial freedom occurs when your asset produces enough income. And that's where you hear people say, I want to retire at 40, I want to retire at 50. Or the people are saying that, my cousin and the wife, both of them, they retired at 50. You see a lot of that. And you don't have to retire if you enjoy you have your, but if you enjoy your job, you don't need to retire. But you have the options. They're two different things, because if you are working because you have to work, it's different from you are working because I want to work. Right? That's what financial freedom gets to help you to do. When you build wealth, you are working because you want to. But when you are earning, you are remain on that earning, you are working because you have to work, because you have to pay bills, right? Pay bills. That's why we are talking about paycheck to paycheck on a daily. You hear this, oh, I'm all, paycheck to paycheck. I can't step off. I'm working to 65. I'm tired, but yet I still have to stay. But when you build wealth, you have the options, right? It's just like when people say that, Does money buy happiness? I would say, well, man, I don't know, but what I know is that the lack of money buys pain. I know what it buys. It buys you. It buys you BS. It buys you, poverty. It buys you. That I know. But when you know, it's also a thin line. That's the thing that we talk about. So this is the system of wealth build. It buys you niche. Hey, Mr. Gregory, welcome. Welcome, welcome. How are you today? And Mr. Gregory has been a part of this community. He's retired at 52. Can you imagine? Yes, that's what we're talking about. And he literally, guess what? He literally follows all of the steps of wealth building. He has built wealth in the right order. Mr. J. Crew is another one that is retiring in 2 years. Thank you. He's retiring in 2 years as well. He said he's just working because he just enjoyed to work in the steel industry. He already has 18 real estate properties, and then he has more than 2 million in his 401k. So he said he's just working because somebody is paying his he's getting free health insurance. That's what he said. Said that's what he said. Those are people that have walked whatever journey that I'm talking about. They have walked it and they've achieved it. And that's why it's so beautiful that we have great people like Mr. Gregory, Mr. like Jacob, and every other person. I know one person, is it Giordon? She closed on on her first rental property, I mean, on her first home on Monday. Yes, this last Monday was when, and then Stephanie is another person in this community from Minneapolis. She is already working on searching for her own property as well. And a few other people that are here that I know that they are working on it. Another thing that I know that I'm working right now, I know people have asked me about URL or IUL, right? They have asked them because we also need to think about protection and all of that. When it comes to when it comes to life insurance, on it's not something that I'm very heavy on right now, but I am also doing research. Remember, whenever I'm doing things, I always tell you things that I've verified or I've done. I know people have asked me, Sylvia have asked me about IUL. I am looking into it. I want to learn about it. And, at some point, I'm going to bring it to this community and we'll probably have it as one of the pillars. If we verify that it's something that is working and I put my money into it, and definitely it's something I would share with every one of us. So be on the lookout for that. So understand this is the system. Number one, you have your income. I'm setting up my website to teach the people out there to buy real estate and create. Absolutely, that is amazing, Mr. Gregory. I am always here whenever you need help. And let's see how we collaborate. I teach that as well. Like I said, I'm going to be training people how to do real estate. We would be hopefully we can collaborate on that to see how we can build something together, just so we can help as many people as possible. And that's go. So the system becomes income. When you get income, you save as much as possible. You have the asset, okay? You put your money into asset, right? Chanti Eyes, welcome. And thank you all. If you haven't gotten your daily at me, consider doing that. Daily at me is just one coin. And if you have not shared this live, consider sharing the live. If you can tap it out all the way to 20,000, that would be great. Yeah, because if you share, press my forehead, your contact comes up. That would be great to have more people. And of course, tapping out the live, it's also getting more people to this live. Thank you all for doing that. If you can get it all the way to 20,000, that would be great. And if you haven't gotten your daily admin right up there, we're trying to target, I think, 10 today. So if you haven't got it, it costs you one coin, and one coin is 1 cent. What that does is it just helps this community go on the FYP, and I think it also helps you, and then you can claim it. So for everyone, for the 5 people that have already gotten their daily admin, please go to where Money Talk is. Money Talk with Dr. Lina up here, right there, right? You will see something that will say claim. Okay. Thank you, Joy Unspeakable, for the follow. Click on it, then you can claim your points. I don't know what they said you can claim it. I know I go to people's life and I can claim it. And for the YT community, welcome. If you haven't subscribed, consider doing that. Today, we're talking about wealth building the right order. Wealth building the right order. Okay. So number one is, and this is the system, the income, right? Income, save as much as possible so that you'll be able to buy asset, right? You will be able to buy asset, and of course, When you buy assets, your asset will return as much as possible. Stavera, it's going to return as much as possible. Put it in simple ETFs. ETFs will help you. I always like to start with ETFs. So like a next step for you, right? Ebony, Jennifer, Joy Unspeakable, AC, Benny, Drake, Bashir, User 55, Benjamin Bossa, they are four. The next thing for you is, if you are just a beginner investor, right? I would recommend start with simple ETF. Just go open your Fidelity shops or Vanguard, any of those three, open or even Robinhood, and automate it such that every single time when your money go, I mean, every single paycheck, even if it's $50, if it's $100, just start, right? Just start and just start putting your money right there and automate it such that they're going to buy those spread, either VO the S&P 500, then have some in dividends, have some in the tech, and have a little bit in real estate. Okay, you can do ratio, ratio 20 50, meaning S&P 500, or you do ratio 40 20 20 20, something like that. 20 20 20, real estate 20, Nasdaq 120, 20% also in dividends. Then you have your 40% in the S&P 500. For Benjamin Bossade, and of course, where you open your account, I already talked about that. If you're in Canada, I believe it's Wealth Simple. You can open Wealth Simple. So because those three companies, those three brokers are for in the US. If you are in if you are in the UK, I think it's Trading 212. If you're in Nigeria, because I'm a Nigerian American. I'm in Texas in the United States. For those in Nigeria, you can do Bamboo. Bamboo is one. You can do Stanbic IBTC. All of those is where you can also put money into. Okay, Drake, Benid, AC, Joy Unspeakable. You can. So I always say start with that, because what that helps you to do is that you are building. It will help you build consistency. Automation will help you, right? It will help you build consistency. And when you see that you are building wealth, you see that it's growing, right? You see your money. If Renate, welcome, 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 welcome here. And thank you all for sharing the life. If you see that you are building wealth, right? You're building, you see that, oh, you put $100, and tomorrow it becomes 105. You are encouraged to put 1,000, right? If you see that, oh, 1,000 is doing well, your chances of putting 10,000 is higher. And that's what I always talk about. Simple ETF. Start with that. Don't pick and choose. Just do, like the ETF. Do your research and do that, and start growing well that way. Once you get comfortable and you see that, oh, I'm growing this, then you can now say that real estate is the next thing. Now, when it comes to real estate in terms of assets, that requires education. It requires education. Like Mr. Gregory says, having a website. I would also be doing a free training for everybody, across all the multiple platforms, YouTube, YT, TT, IG. I am going to be doing that, but I think it's going to be outside of the platform so that because I do not have capacity to train multiple. Right, real estate require real training. I actually paid thousands and thousands of dollars years ago when I wanted to start real estate training, but I'm going to be doing it for free because I'm just helping the entire community. The goal is to build as many people. The more millionaires that we make, the better, because it's going to help end crime, reduce crime. It's going to reduce poverty. You are also blessing other people. Yeah, that is my goal. So I'm going to do one-time training where I train everyone. I train everyone that registers. So if you haven't followed, consider following. So when I put the video out. In the video, I'm going to tell the date and all of that, and put the link for registration, because like I said, it's going to be out. It's probably going to be outside, so we can have everybody in one. And make it really close, because we want it to be dedicated, because at the end of the class, I want you to be able to say, you know what, I am ready to go buy my first property. And then I want to also be able to understand what's that thing that is holding you at the end of the class. And if the goal is also to see what other people that we can bring, because when you're buying real estate, number one is you need to get education. Number two is you need to have solid credit, except you have the cash to buy, right? Which I know 90% of the people does not have 200,000, 300,000 sitting somewhere, right? Right. And then how do you get those down payments, right? Your credit, how, you need to start working on that. Your credit, how do you build that? And of course, the down payment. What are the strategies to use to get those down payment? Those are the three things: education, your credit, and of course, the down payment. Those are three things that you need when it comes to real estate. When you have succeeded with that, your chances of winning with real estate is almost guaranteed, because credit and what's it called, and down payment will help you get it started, right? You'll be able to get the property. But education is what is going to make you buy it right. Because you would have heard people saying that, you know what, I failed with real estate. Yes, the people fail, as with any business. People fail. But if you do it the right way, just the same way I lost 100,000 in the stock market because I did not get education. People fail when it comes to real estate. If you don't, you fail from the side of the tenant. If you don't buy it right and you're doing bidding war, you know the chances of failing is there. But if you're somebody like me, that as I'm buying that property, I am getting an equity of 50,000. Those are strategies I'm going to be teaching in that life. Hopefully we can still do it in this March, or end of March, beginning of April is what I'm looking at, because I'm still looking at what best platform to have it. Maybe it's going to be on Zoom, but then how do we collate the information? Those are things that I'm trying to still figure out. And once I get it, I'll put a video out there, and once you need to just register, and that's going to be for free. And I'm going to be training everyone for free. So you want to subscribe on TT on YouTube, and of course you want to subscribe on TT as well. Haven't subscribed to my YouTube um, channel, consider doing that. It's Money Talk with Dr. Lina. On Instagram, I'm Money Talk with Dr. Lina. It's just going to help you. On YouTube today, I'll be releasing a long form video that is also going to be helpful, because what that does is it's a long form video, where you can, like the video I have on how to buy real estate, different, ETF versus real estate. I have things on VO, QQQ, SCHD. If you're wondering what that is, why you should do that, these are videos that I have done there that you can actually play at your own time, replay, take notes, versus when we are talking about it right now and we are going, this is almost like breath, right? Breath, right? Horizontal. So we're going everything, but then those are much, much deeper. They are much deeper. We go in depth. If I'm talking about ETFs, I'm talking about ETFs all through. If I'm talking about real estate, how you can buy your real estate within 4 months, it's there. So you want to go there, Money Talk with Dr. Lina, and subscribe to the channel as well. And those on YouTube as well. Think about Titi. I am always here. I always have these lives here, so you don't want to miss out. You want to also follow here as well. Well, so I'll leave a few more minutes to ask questions. Understanding that financial freedom, okay, of course, when your asset produces enough income to cover your lifestyle, and you have your income, you have your asset. Your asset, when your income builds your asset, then asset will give you cash flow. Cash flow is what you need, and that's how you get your financial freedom. Okay, always understand that one thing. Always understand, Sister Vera, Ebony, Jennifer, AAC, Benny, Duraki, Drake, Bashir, Afu, Buti, Miss Tendai, Judy. Understand that salary would help you pay bills. Salary will help you pay bills. But guess what? What's going to give you freedom? Assets will help you build freedom. Asset is what helps you build freedom. Your salary will only pay bills. It's going to foot down your lifestyle. And that's what is called paycheck to paycheck. That's what is called rat race. That's what you call hamster wheel. So if any of those you really do not like it, or it frustrates you that you don't even have options, I need to work to 65. Am I going to be working to 65? Oh, thank you, thank you, thank you. So if you can, yeah, basically, Sister Vera, thank you so much for that. If you can, if you understanding the salary, right, pays the bill, right, and back to where we started from. Remember, This is what it means by your salary. Remember, even if you're earning 300,000, you would, so far your income, right? So far your salary is what you, that's, there's a limit to what you can earn. You remain a poor, no matter what that income it is, right? But what you do with that income is what will transition you to this rich dad. And that is you having assets, asset that builds that freedom, because rich dad is the one that has the freedom. Poor dad is the one that remains on the hamster wheel, having paycheck to paycheck, right? That's what it means. Okay. Awesome, awesome. Let's have any questions. Severa, thank you so much. Joy Unspeakable, Mr. Gregory, thank you. Jennifer A, AC, Benny, Drake, Afua Beauty, Judy, and everyone. You might be wondering, where is the, how do you tap? It's just basically just touch the screen, tap, tap, tap. I know that some people don't know this. It doesn't cost you anything. It's just the hand touching the screen. That's what it means when Severa was saying that. And for every other person, let me know, do you have any questions at all based on what you agree, you do not agree, yes it works, yes it works, yes it doesn't work, you don't agree, or you agree, I'm going to be using it. Any input, and thank you all for tapping out the live. If we can get it to 20K, that will be great. That would be great. And we'll be wrapping up in some few minutes, and I just wanted us to ask questions, okay? And for those that are just joining, we are talking about the difference between earning and wealth building. Also understanding that wealth building is how you build wealth. Your earning is your salary, your paycheck, which as a cap will not build wealth for you. Okay, you will pay your bills, but it doesn't build wealth. It's what you do with that earnings that is what it helps you. That's what builds wealth. And we talked about 6 steps. Okay, number one is your income. Your income, making sure that you are keeping at least close to like 50% if you can, 50% of that, and then you put it, you're paying off your debt, any high interest debt that is above one, that is above any high interest debt that is above uh that's about 10%. You want to pay it off, okay? And then we also talk about the third thing, which is um what was that? Emergency fund. Put it in an IE savings account. And then for you to start building the wealth, those are the three foundations. Then the other things that will help you build wealth is investment, smart investing. There's a reason why we call it smart. You are investing in ETFs and index funds, right? And of course, real estate, which is what is going to make you build that wealth quicker. And that's how you build freedom. Okay, that is how you build freedom. Thank you all. Any other question? Any question? Leech, welcome. We're just wrapping up, Leech. Welcome, welcome. Thank you all for the daily at me. If you have gotten daily at me costs you 1 coin. So check in the bag right there, and it costs you 1 cent. Okay, but it helps this community as well as help you. And then once you have, because you will be able to get content like this, you know when I'm live, you will also be a part of this. I would recognize you whenever you're here as part of our community members. It's if you go up there, you can also claim it, so it's not like you're leaving it. So for everybody that I've already done daily at me, remember to go up here, right up there where you have money talk with Dr. Lina. You will see something called claim it, right? It means you should be able to get maybe some 30 something points, and you would, I don't know how that helped, but I know that you can use it one way or the other. Okay, so any question at all? I think Sister Vera, thank you so much. Thank you so much. It's always a pleasure having you here, and every other person. Thank you so much. Thank you. Ebony, thank you so much. Jennifer, thank you all for tapping up the live. If you can get it 20K, like Sister Vera said, that would be so amazing. It doesn't cost you anything. It just costs you your finger like this. Whenever I'm in people's life, I am listening, I'm locking away, but then I am just tapping it out all the way, all the way. Yeah. And feel free to ask if you have any questions at all. Any question at all. Let me know. Any question at all. Any question at all. Any question at all. All right. Personal question, finance question, any question at all. Okay, okay. I hope yeah, we'll be wrapping up in 2 minutes. Uh okay. And by the way, anybody doing well with this 529? I was talking to somebody yesterday and I was talking about the 529. Apparently, I'm not the only one that feels that way. I am not the only one because if anyone that has used the 529, it's worked for them. Anybody, because it didn't. I just realized that the money was just steady. And if you also care to share, Miss Tender, Judy, Afor. Let me know where you're connecting from. By the way, I am in Texas, in United States. So if you care to share, I've been to 22 countries. So part of the things that I talk about, you probably would have seen. I talk about money, and of course, I talk about the lifestyle because I love good things. Okay, and I think that's part of my why of making money, right? Because I want to enjoy decent life, but I do not make my salary. I don't make my paycheck pay for it. I make my asset pay for it. Okay. That's basically what I do. Make my asset pay for it. All of those lifestyle that I'm talking about. So I've been to 22 countries. My goal is to travel the world. Oh, good day to you. Welcome. My goal is to travel the world. So, and that's why I always say, okay, you know what? Having to work, I'm sorry, but I'm shocked that it's taking so long to get to 20. It's okay, it's okay. It's okay, Stavera, that's fine. If you get there, fine. If you don't, it's okay. It's okay, it's okay. Yeah, it's not like we have a particular it's just great to just have everyone here. But thank you so much, Sister Vera, and every other person. Joy Unspeakable, thank you so much for the roses. Thank you so much. So I've been to 22 countries. I just enjoy traveling because I just feel that traveling just opens you up. It just, but your context is so exceptional and free. I just can't fathom it. I know. I mean, yeah, I know. I know. I am glad that I'm able to give back. Add value because ultimately, like I said, it's just amazing that we're able to help to we're able to help as many people as possible. And if you, for everyone here, can we just tap off the life? It's just tap, 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 like tap out the life all the way so that we can, if you can, Judy, Joy Unspeakable, and AC, Jennifer, if you can just tap out the life all the way to get it to 20,000, that would just be great. That would be great. Yeah, I'm glad that Severa, you find it exceptional. I get that every single time. I get that every single time. So it's always a pleasure to have. Thank you so much, Joy Unspeakable. Thank you, Sister Vera. Thank you all for giving back. And when you're tapping, you just I always do it like like non-stop, like it's just like a form of exercise. And Angela Dale, if you're just joining, welcome. But then we are also wrapping up the live. If you're just here, but your context, yeah. I'm glad. I'm glad. Even if it's just one person, I just wanted to be able to add value. Even when there's one thing, even whenever I'm on a job or something, I always say, "Am I adding value?" If I'm able to add value, that gives me so much joy. Okay, because think about it. People earn to, I had a friend that she was earning so much. Let me tell you the story. She was earning so much to the point that she got to the bank one day and they had to call her into a room and they said, "Oh my goodness, you have so much in your bank account. And if let's assume the bank goes down, you will only be able to claim up to 250,000." And so it means that she has so much money in her account, but she's not doing anything with it. And I'm like, okay, so what are you doing? Because if you put money in your account and it's just sitting there, it just generates nothing. It's actually losing value because inflation is at 3%. It means that you are losing 3% of your money every single year. right? And that's how she started investing, by the way. So in those are like success stories that I had, which just gives me joy, and that's what propels me to even do more. And by the way, who has seen increase in the prices of things? Because I did a content. If you have not seen it, I did a content about people, what's going on I went to Sam's Club yesterday, and I got to Sam's Club, and napkins and the toilet rolls, they were, oh, thank you so much for the daily pie 212. We are wrapping up. You are just, but that's amazing. Today we talk about wealth building. Wealth building. And by the way, if you see the daily admin, just makes me recognize you're part of this community. You see the money talk with Dr. Lina, the MTDL, right? So I know that you're part of this community. That's what it does. So I can recognize it and also welcome you. Of course, we recognize everybody, appreciate everybody that comes here. So it just helps me to recognize that this person is a part of my community, and that's what it does. The MTDL. So because it's basically a $1. I mean, 1 cent. 1 cent is what that does. So, who has noticed the increase in whatever that is happening? Like, I went to Samsung, we went for the grocery shopping because we do this once a month, just to, in terms of the account structure, the four account system, right? Thank you. Thank you. In the terms of the four account systems that we have, right? And I got into the store, and I napkins was $24. Normally it's like I have never seen it for $20. Like, it was $24. And like, what's going on? Things are Then I bought gas. I literally had to do the video at the gas station because I used the premium grade, like the is it premium, the highest grade, right? And the highest grade, I kid you not, because I'm in Texas, gas is a little bit is cheaper in Texas. I bought it from Walmart. I bought it for $2.35 or something, right? Because I constantly. But guess what? I went there 2 days ago. It was $3.30 something. It was more than $1. Who is seeing this? This is just. But guess what? Your salary is not increasing. I can still increase my rent because, of course, if things are becoming expensive, the rent is going to go up. It's going to definitely go up. I am going to increase my rent. But guess what? Your salary, you're still going to get 1% salary increase if you get lucky, or 2% if you're an high performer. You exceeded expectation. That's the more reason why you need to build asset. It is just crazy. Am I the only one seeing it, or am I the only one seeing this? The increments in things like gas, and this is just happened in the past 2 3 weeks, because we went for the last shopping 3 weeks ago. So compared to 3 weeks, because we always do on the 15th, but because of the spring break, we are doing it a week earlier. And then I'm saying this. So you just go check it out. Maybe your budget before now was 1,000. You might want to add another $100 to it. And then also check your gas as well. So if you really did not care and just buy gas any other place, maybe you want to just so use all those wholesale, like use a Sam's Club, or use a Costco, for those in the United States, because right now I tell you, every dollar counts. Because remember, that's $1 of gallon, $1 more. That's what it is. So that's why we need to start building asset. And guess what? Your salary is not increasing, not by dollar every. It's not. You let everything go up, not but just think about it. And then also think about another thing that I want to start doing. I want to start looking at oil stocks, even though I know that I don't talk about individual stocks, right? But when things happen, you want to see how do you. Oh, thank you so much for the 20K taps. Really appreciate that. So when you see that, what can you leverage, right? With the war that is happening, with the Street of Hormuz and all of that, what with everything that's happening, it means that the stock market can also, the oil price is going up. What that means is that the chances of the stock or our stock going up is also very high.